Well, we have a whole lot to unpack here. Today's D-Day, as you probably know. Welcome to another enlightening edition of Ted Speaks. Today, we're diving into one of the most fascinating yet underappreciated stories of World War II, Operation Fish. Have you heard Operation Fish before? Well, you're going to know all about it right now. And how long silver, along with gold, played a critical role in preserving Britain's financial survival during the time of unprecedented global conflict. As we all know, World War II wasn't just fought on battlefields across Europe and the Pacific. It was also fought for resources that would sustain armies, provide essential supplies, and keep nations' economies afloat. One of the key resources Britain had to protect was its wealth, specifically its precious metals, which were included gold and silver. These metals weren't just forms of currency, they were lifelines to sustaining Britain's war effort and securing its future. By 1940, the Nazi forces had swept through much of Europe. France had fallen, and Britain stood alone in the fight against Germany. While the British Air Force was engaging the Luftwaffe in skies, other battles were taking place, one of financial survival. In the event of an invasion, the British government knew it was highly likely that the enemy forces would seize the country's financial assets, as they had done in the other countries, including its reserves of gold and silver. This posed a real and urgent threat to Britain's ability to continue financing its military operations and ultimately its ability to survive as a sovereign nation. So the British government, under the leadership of Sir Winston Churchill, devised a bold and secretive plan called Operation Fish. The goal of the operation was to transport Britain's gold reserves to a safe location far from the reach of the Nazi forces. However, it wasn't just gold that needed protection. Britain also recognized the importance for its silver resources, which are an integral part of the nation's wealth, just as essential for maintaining its economy. Silver had been a cornerstone of British currency for centuries, and its importance in the global economy had not diminished by World War II. While gold was more obviously an asset to secure, silver was just as vital. In 1940, Britain's silver reserves were part of the country's stockpiles, as they were with ours, stored alongside gold in banks and government vaults. These silver coins, bars, and bullions were not just valuable in their own right. They represented the British government's ability to continue trading and financing its military needs, which were crucial for the war effort. So what happened to the silver? Much like the gold, the silver was carefully packed and sent across the Atlantic to Canada, a place considered beyond the reach of German forces. Another salvo was sent over to the United States to pay us for the munitions that we were making for our allies, which was then kept in Fort Knox. But the transport wasn't easy. The British Navy had to escort the convoy of ships, and the operation was conducted with extreme level of secrecy, as you can imagine. The silver was part of a massive operation involving not just the military, but high-level coordination with the financial sector. So why was silver so important? Well, silver was essential for everyday transactions and trade, as it will be once again here. While it wasn't as universally as recognized as gold, it was still a key part of global finance. Britain's reserves, bars and rounds and bullion, were used for minting coins, which were a crucial part of maintaining the economy and ensuring that workers were paid, goods were traded, and essential supplies could be purchased, all of which contributed to Britain's resilience in the war effort. But the role of silver in Operation Fish wasn't just about maintaining Britain's economic stability. It also served as a key financial instrument that could help the British government access funds in times of need. Much like gold, silver had an intrinsic value that was universally accepted. Its transport across the Atlantic wasn't just about saving a nation's precious metals, it was about safeguarding Britain's ability to conduct trade, purchase military supplies, and secure crucial loans from neutral countries. Silver and gold bars were packed in wooden boxes marked as salted codfish. Why? Because back then, codfish was packed in salt, put in wooden boxes, and sent across the Atlantic Ocean and sold in the United States. Well, they figured, well, let's get the cod out of there and let's load it up with silver and gold, which is exactly what they did, which is why it's called Operation Fish. When the gold and silver finally reached Canada, as well as the US, the British could breathe a little easier. They had secured the assets necessary for the future, as well as having paid the United States for the armaments we'd made them. Not just the gold that would be needed to continue financing the war, but the silver would underpin the day-to-day operations of the British economy. These reserves would prove pivotal as Britain continued its struggle against Nazi Germany, ensuring that they had the resources needed to maintain the war effort without succumbing to the financial collapse. So, in a way, the preservation of silver in Operation Fish was as significant as the preservation of gold. While gold was seen as the ultimate store of value, silver had a practical, everyday value that allowed Britain to continue its industrial and military operations. Together, these metals were part of Britain's financial arsenal, providing the resilience and flexibility needed to persevere through some of the darkest days in world history. Today, when we look at the financial challenges facing the world, from inflationary pressures to geopolitical tensions, we can draw important lessons from Operation Fish. Just as Britain sought to protect its financial resources during a time of crisis, we must think strategically about how we must preserve and secure our own wealth. Precious metals like silver and gold remain invaluable today, not only as a hedge against inflation, but also as a store of wealth during times of economic instability. Story of Operation Fish reminds us that securing financial resources isn't just about protection, it's about foresight and it's about resilience and understanding the role that tangible assets play in securing a nation's future. To play here, Elon Musk and President Trump stage a massive public feud, slinging insults and grabbing every headline. The media eats it up, focusing on their clash. Then, boom, Elon drops the Epstein bombshell, claiming Trump's in the files. Suddenly, all eyes shift to Epstein. The media is buzzing about those sealed documents. Perfect timing for Kash Patel to disclose the Epstein files. This is Sun Tzu level strategy, misdirection, then striking at the heart of the narrative. Trump and Musk are playing 4D chess, orchestrating the greatest reverse psyop ever. Nothing can stop what is coming. Absolutely nothing. U.S. Cyber Command verified Obama's so-called birth certificate as a digitally manufactured forgery, traced back to CIA labs in Langley. The real document, extracted from British colonial archives, prove Obama was born in Mombasa, Kenya in 1961, not Hawaii. That makes every act of his presidency constitutionally invalid. Every bill, every judge, every ward null and void under national security law. Watch for this term to be used. Fruit of the poisonous tree. It's a legal term. Anything that happens after there was an illegal act is null and void. That leaves a whole lot of things. That's a whole lot of luggage out there that's got to be packed and unpacked. Looks like it was ultimately Obama who was behind the entire plot to undermine Donald Trump's presidency. Forget the Russians. Here is the real enemy. FBI Director Kash Patel has seized the phone and bank records of everyone in Nancy Pelosi's office on January 6, 2021. Amen. Let's open Pandora's box. The Freedom of Information Act confirms Bill Gates and George Soros have both given huge gifts to Justice Amy Coney Barrett. Ooh, she's in their packets all along. I thought she was a good person, didn't you? We were fooled. Amy Coney Barrett clearly lied to America. Should she be removed for being a fraud? I think so. Supreme Court Justice Amy Coney Barrett lied to America by pretending to be a conservative. Do you agree? Today, we're diving into a topic that as many of us cited and watching closely, the surge in silver prices. This is more than just a blip on the radar. This could be the start of something much bigger for silver. As we take a look at the market, silver has jumped significantly. In the world of precious metals, a move like this doesn't happen overnight. And when it does, it's often a sign that something major is happening beneath the surface. This isn't just a short-term fluctuation. It's the result of various factors that we're going to break down. For the silver market to react this strongly, we need to understand what's driving the action. More importantly, how it will impact both short-term traders and long-term holders of silver. So let's look at some key forces at play. A large part of the price action can be attributed to increasing global geopolitical uncertainty. Whether it's tensions in the Middle East, economic instability in emerging markets, or even the ongoing shifts in global trade, these risks are prompting investors to seek stability, which you should be too. When the world is filled with uncertainty, precious metals like silver are often seen as a safe haven. While gold has traditionally led the charge in times of political turmoil, silver is quickly gaining traction as its value rises alongside the growing inflation fears. We are also seeing concerns about the long-term stability of fiat currencies and the dollar's purchasing power, things we've talked about, making silver more attractive as a hedge. Hedge funds buying dimes. In uncertain times, people want a tangible asset, something with a proven history of holding value. This is where silver shines. But it's not just the political uncertainty that's driving the surge. There are some serious supply and demand imbalances at play, namely the Shanghai Futures Exchange now requiring future delivery of physical metal within 3 days of the contract. For months, we've been discussing how the silver supply chain has been under pressure. Well, you daggone right it's under pressure. You got 365 paper ounces of silver for every 1 ounce of physical silver that exists. Do you see what's happening? The tide is going out and the emperor has no clothes. Miners have been facing difficulties due to rising costs, labor shortages, and operational setbacks. Of course, all these labor costs are expressed in what? Dollars, right? The result, a tightening supply of physical silver. This is where the story gets interesting because silver has always been more than simply a commodity. It's a highly sought after industrial metal. It's used in everything from electronics and medical equipment to renewable energy solutions like solar panels. As the world continues to push for more green energy alternatives, the demand for silver, particularly in technology, is expected to increase. Now, if you're holding bars and rounds and beanie babies and stuff like that, this will be your customer for your bars and rounds. But is that going to be the person who's going to hold your cup of coffee that you're going to want to buy or a bag of groceries? No. So you're going to have to go to a third party in order to get the value out of this. And they're going to take a chunk out of it and give you back what's the coin of the realm in order to be able to use it. Do you see what I'm saying? You don't want to use these coin dealers more than once. Buy what you need the first time. Now, if you've been sold something that's not coin of the realm, I know some coin dealers out there, namely SD Bullion, will charge you or actually send a statement off to the IRS stating what the value is that you traded. Most other dealers do not do that. They take the value of what it is you traded, subtract it from what it is, or add it to what it is you're buying from them, and the difference is what, or credit is what you're owed. So it's not just the political uncertainty that's driving the surge. There are some serious supply and demand imbalances at play. For months, we've been discussing how the silver supply chain has been under pressure. Miners have been facing difficulties due to rising costs, labor shortages, and operational setbacks. The result, a tightening supply of physical silver. This is where the story gets interesting because silver has always been more than just simply a commodity. It's a highly sought after industrial metal. Folks, you don't know me very well. I'm not a salesman of silver. Believe me, I am a certified financial planner that's retired. This is what you need to do, not stocks, bonds, and mutual funds. And if someone is telling you that's where, ask them to show you a Monte Carlo simulation, a Monte Carlo simulation. If you're stuck on stocks, bonds, and mutual funds, ask them to show you a Monte Carlo simulation of how long your retirement dollars are expected to last given certain parameters that may or will happen in the markets. Silver is used in everything from electronics and medical equipment to renewable energy solutions like solar panels. As the world continues to push for more green energy initiatives, the demand for silver, particularly in technology, is expected to increase. However, while demand is climbing, the ability to meet that demand is limited by the supply chain. This mismatch has started to show up in the price. Today's surge is a clear signal that demand is starting to outpace supply, and with silver sitting at the intersection of both an industrial metal and a store of value, it's poised for significant growth. You're not going to get it out of the ground as easily as you did before because silver doesn't attract sulfites, meaning that as silver in a molten form leaves the center of the earth, it shoots up straight towards the earth's surface. Whereas gold, on the other hand, attracts sulfites. Think of it as a clotting agent that causes gold to clot as it doesn't get up to the surface of the earth. So you have to keep going down further and further. But see, the silver doesn't attract the sulfites. So the further down in the earth you go to get the silver, the less you're going to get. The mining ratios are going to reverse. And that's what we're watching right now. The reversal of the mining ratios, the mining ratios stay the same. The pricing ratio is what we want to watch. The mining ratios are going to go from 7.1 to 1, less than that eventually. Okay, that's what's going to happen. So how's silver currently priced? Almost 100 to 1. So an ounce of silver is what, $36? How much is an ounce of gold? Like 3,300. So you're talking about 90 ounces of silver to buy 1 ounce of gold. Well, when it comes out of the ground, it's 7.1 units of silver to 1 ounce of 1 unit of gold, and that trajectory is heading downward. Where do you think you should put your money? In bars and rounds, it might be taxed, it might be held up. You're not going to get the full value for it. You want something that's fungible you can use directly with your purchaser, your customer, or whoever it is you're going to be negotiating your money with. Your money is your purchasing power in this particular case. So what's particularly interesting about silver in this context is that its utility isn't just a hedge against inflation, but it's an asset that benefits from inflation. Absolutely. Silver's industrial demand means that as inflation drives up production costs, the metal itself will become even more valuable. It's a dual purpose asset in many ways, helping investors protect wealth while thriving on the increasing demand from industries. This surge in silver prices could very well be the beginning of something much larger. We have seen silver go through long periods of consolidation. Now we may be on the verge of entering another bull market phase. When we look at silver's historical price cycles, we notice patterns of strong rallies followed by periods of correction. The recent price increase may indicate we are entering a new cycle, one where silver will start to see consistent upward momentum. The question is, are we witnessing the start of a prolonged bull run for silver? If the price action continues, we could see silver prices push even higher, which we will, benefiting long term holders and investors who have been stacking silver through various cycles. I'm handling all my family's money, and all of it is in physical silver. Now I'm going to tell you where it all is, but bottom line, folks, as a retired CFP with 27 years with ING, I'm telling you what's going on. Follow the leader. What's exciting about this surge is that it's more than just about the market action. Silver is playing a pivotal role in the future. As industries ramp up efforts to use silver in renewable energy technologies, and as a global monetary system faces increasing pressures, silver is becoming a cornerstone of both economic protection and technological advancement. For those of us who have been following silver's potential as a monetary asset, it's thrilling to see the market respond to these fundamental choice forces. Whether it's for protecting wealth in uncertain times or profiting from its industrial demand, silver is increasingly becoming a critical player in the global financial landscape. So as we sit here today and we watch silver surge, let's remember it's not just about today's price. It's about understanding the forces driving this movement and positioning ourselves for what's to come. Silver's role as both an industrial metal and a financial asset is becoming more and more important than ever. And in today's price action is any indication, the silver market is primed for more exciting developments in the near future. I'm not wrong, I'm early.